Okay, Doug and I are back for our weekly insights. Welcome, Doug.
Thank you, Jay.
So, the question I have for you this week is what's an action bias?
Right. Yeah. It's this feeling, particularly in challenging situations, that you must do something.
Hmm.
Right. And you can imagine where this probably came from. Think about our evolution. Probably taking some action in the face of danger or downside was probably a very good trait. But when it comes to investing, action bias generally does not work in our favor.
Okay. And so specifically to reference, we last week we talked about the correction
Right.
and then we saw a little bit of a change.
Yeah. Yeah. So it's quite an interesting example. So at the peak of I call it sort of the red screens on CNBC, when all of the graphics turn red and all of the media was talking about this correction, which means the market's down 10%. Emotions are high, right? And the media obviously is, that's how they get paid, to create this excitement. But what we saw is, on literally the day after that correction, the market started to rebound. So if you had, fallen into the trap of action bias and decided to do something in your portfolio, like sell out of equities and put it in cash, you would have missed the 4.5% rally that's happened since then in U.S. equities.
Yeah, I think it's hard, right? The news really goes hard into items that they want to promote and talk about, and I think someone on the marketing side, like, I see those and I feel that same anxiety too. And so is there what could you recommend to folks? I mean, I know we've been talking for a couple episodes now about trusting the system and the process. What else can you show people or tell people that to maybe calm them down in kind of those times of panic?
Right. Yeah, I think it's important. We talk a lot about preparing the portfolio, right? And that's sort of what we're doing, right? We're not predicting, we're preparing. And diversification, we talk about it ad nauseum. It's one of our favorite topics.
Yes.
But, as an individual investor, you need to prepare yourself really mentally for these moments. And you can do that by looking at history, understanding, for your risk allocation. Let's say you're what I would call a growth investor. You've got 75% of your assets in equities. You can expect the market to fall 10% within a year, pretty much every year. And if you look at, on a yearly basis, if you were look at history, you're going to see those 10% declines happen pretty regularly. You're going to see years, a full year down 20% on occasion. And you need to be prepared to take that risk and understand that's just part of the risk you get for the reward that hopefully is down the road for the long-term investors who stay the course.
Yeah, I like that. And it's hard. And I think that's why, having a professional financial planner on your side is always good to kind of help you through those times.
Right.
Yeah. And then, so talking about that, we saw the rebound, and then what's kind of the headline of the week for you this week?
Yeah, I think it's just resetting those expectations, right? We, hopefully, you didn't fall into the trap of action bias. You stayed invested. And so now, fresh start on the new week. Last week was kind of flat. This week, market's up a bit. I think it's just about how quickly the market can change. What's happened this week, we've had a bit of change of tone in terms of tariffs. Maybe they're not going to be as onerous as was originally discussed. Market likes that. So we get a rebound. Again, we don't want to be reacting to these, but that's what seems to be driving the market this week. Yep.
Yeah. And then I know we don't really look ahead or try to predict the future, but what are some things that maybe folks can be prepared for so that they don't, if something happens, they don't really get panicked?
Right. Yeah, I think they should be prepared for anything.
Yeah.
I know that sounds pretty generic, but you just don't know. And I think, I like to use this example a lot. We're into episode 3. I've probably already used it, But, think about the pandemic, right? And how unpredictable that was and how big of an impact it had on the markets, right? We had a significant market decline initially and a very quick rebound. And then because of all the stimulus that went into the economy, a tremendous performing stock market. Nobody predicted that. And probably nobody would have predicted how the market reacted had they even known it was going to happen.
Right.
So you just have to be prepared for moments. That's an extreme example, but you should go into every week just prepared for whatever it might throw at you and ready to take advantage of it again. And I'm going to hit it again and again, probably every week, Jay. But diversification, systematic rebalancing, systematically selling high and buying low. So if that opportunity presents itself, you're ready for it and you're going to take advantage of it.
Yeah, and I think I would take that even further. And for those of you that have been keeping up, and I'm going to have my last interview with Greg about behavioral finance on this episode. And really, I think another one advice that Greg would give you, and the things we talk about, is don't even look week to week, right? Just give it a rest and let it sit, and know that this happens. There's going to be news that's going to go up and down, and you're in it for the long term, and that's where you should stay.
Right. Yeah. Don't even look at the financial news. Don't look at your portfolio day to day. That's all great advice for long-term investors.
Okay. And so, I think this week insights on the blog was very focused towards this topic and also comparing it to soccer.
Yeah.
And so why the comparison to soccer?
Yeah, well, I said there's two reasons. One is I am surrounded in the office by two super fans. So Matt and Dave on either side of me, both are regular Premiership watchers. But then also it allows me to bring up my story about David Beckham, which is it's on the Startegic website. I sneak it in now and again, but it's a claim to fame, if you will.
Yeah, I mean, so really quick, I'd love to hear the story. I know, but please tell us just a little bit about how you played David Beckham.
Yeah. So back when I was in high school, my coach decided he was going to take the team overseas. He'd always wanted to go, so he decided this was the year. We raised money and we went over and played a bunch of different soccer teams over in England. Tremendous experience, had some good games, some bad games, but overall just a wonderful time. Fast forward from there to about 15 years ago, so quite a few years later. I won't do the math exactly for you. A friend of mine says, "Hey, did you hear we played against David Beckham when we were in England?" I'm like, "Well, it's a great story. How in the heck can you, how the heck do we verify that?" Well, sure enough, I'm telling my parents this story. My mom says, I have your agenda from back in 1990. She pulls it out, and sure enough, we'd played the Brimstone Rovers youth team, which David Beckham was on in 1990, and he was the player of the year that year. In fact.
Man.
Yeah.
I love that story so much. It's so good. Well, there you go, everyone. I know if you read the weekly insights, you're like, well, now I want to know the story. You were just like me, and here we are. And because of the podcast, I could force him to tell us. Right. So here we go. Well, thanks, Doug. Thanks again so much, and look forward to hearing more in the future.
All right. Thanks, Jay. Take care.
This podcast is for educational and informational purposes only. Please see the full disclosure in our show notes for more information.